Hi guys, welcome to the next weekly mentoring video. Adam Nowakowski here. It's Monday, April 19th, 2021, and I'm broadcasting to you from Quito, Ecuador, still in the country. Moving around, I had a little break from recording weekly mentoring videos due to some retreats that I've been doing, but now I'm back and we're gonna look at our portfolio. How did it perform? How did it perform through the period of time when I was less busy trading and more focusing on myself? Today is going to be a very special program. I decided to change a little bit the way I'm doing these videos, and I'm going to divide this video into two sections. One section is going to be for everybody, for all the YouTubers, or everybody who's willing to watch some things for free and hear some opinions and so on from my side and see the portfolio, the way it's progressing over time, growing steadily, and being under control and strictly monitored and risk managed. So just for an experience for YouTubers. And the other part of the video is for my students, for the subscribers to optionmindful.com Academy. And this is going to be the part where we're learning to do things with this portfolio. We're going to be doing trades. We're going to be going through deeper analysis of the option trades and stock trades, and anyhow, mental process of decision making there. How do we get into the trade and so on. So learning part 2, part 1 more of a briefing, but still can be very interesting for you guys. So before we go there, a little warning here. This video is for informational, educational purposes only. So no financial advice is given here. Trading is risky. You need to know that. And I'm going to be talking about stock trades and option trades and so on. And these are derivative trades, or these trades can be risky, and it may involve some issues. I'm not having a crystal ball, and I don't know everything. So I'm also speculating here sometimes, and that involves risk, and you may take some losses. So remember, we're trading here for education, informational purposes. I'm using paper account here, and it's strictly and only for learning. Okay, so if you agree with that, can move on. I will show you what the parts I will be having here. So again, an update. The video will be divided into part 1 and part 2, market update and portfolio performance. I will do this, and this will be available for YouTubers and everybody else. And guys who are subscribed to optionmindful.com Academy will see this part plus portfolio, deeper analysis of portfolio, new trades, new option trades, and so on some stocks which I pick. We will be probably doing some scanning and stuff like this as well. So students learning here for everyone to educate a little bit about how the portfolio is performing and my way of thinking and what's going on with the markets and so on. So let's just move on. I'm going to quickly switch to the browser here, and obviously we're going to start with looking at the market. So this is S&P 500 futures. As you can see here, this has been running up in the channel. Today is a little down day, which is something I've been waiting for a longer period of time. As you can see, we've had so many green candles going up. I basically just like a steady upward movement, but no surprises. As you can see, I drew this channel a long time ago, and actually also with some expected kind of corrections or sideways sort of moves. I was wrong here, okay, but not too much wrong. So if I would project, duplicate, clone this, and basically move it onto here, you can probably see what I'm trying to do. This kind of move would be expected. What does it mean? Does it mean that the market's going to crash? No. That just means that the market is just simply going up, and it's having a little kind of correction here. I wouldn't not even say it's correcting now. It's just having one down day. I still expect this market to be bullish based on the economical data that we see, and basically all this currency printing process and what's going on in the fiscal policy in the US. This kind of market, it's crazy. There is the Fed is basically purchasing, giving purchasing power to companies so they can buy their own stocks. There is lots of liquidity there and free money, or currency, I should call it. And that's what is this thing doing. It's just simply pushing the value of the stock market, like measured in dollars, in digits, up because dollar simply is getting weaker, and I think it's gonna be cratering soon, but I don't know when and so on. But just never, historically, it has never ever happened that, you know, governments printing currencies, you know, saved somehow the economy of the country by printing, creating new digits. It usually ended up with some sort of a hyperinflation or other huge economical problems. And you know, that's what we can see here is simply, you know, market just steadily going up. I mean, Fed will not allow it to crash, and there is many reasons for that. I'm not going to be discussing those reasons right now, all of those reasons here, but what we can see here from technical perspective is markets are bullish, going steadily up. I would not be surprised if this thing flagged for a while and then you know, went up again. VIX, so our volatility index, fear index, today up a little bit, but you can see that it dropped significantly from the, you know, what was the support here around 2022. You know, it dropped significantly to the levels below 20, which means basically, like historically looking, we're going back down to the numbers that were available to us before March 2020, when you know what happened. Okay, so it's like, you know, we're back to normal, guys, with the markets. Markets are healthy, everything is great, no reason to be afraid. Federal Reserve got us, you know, they will save us from, well, in fact, these guys probably don't know what they're doing, or they know what they're doing and they're being evil. So today we have a little bit up movements in volatility, in fear index, but still it's insignificant compared to the levels which we had, you know, just a couple months ago, you know, 30s and 40s and so on, this kind of levels, 25. So we're still, VIX 18 is low, which means also the option premiums will be lower, and you know, cost of buying option contracts will be also lower, so we can speculate for a relatively cheap price. And I used that opportunity in my smaller portfolio to buy some insurance on the little portfolio because it was cheap. I was buying it when the VIX was around 17s, so looks good. You know, hopefully this will you know, go up. If you look at the VVIX, this is the volatility index on VIX. So VIX volatility index, it has been going up, meaning that we expected this VIX to change, you know, start going up. You know, there would be more fear on the market. Why? Because you could see on ES steady move for many days, just up move, just bullishness, no corrections, no whatsoever red candles, proper red candles. You know, it was like time machine. I mean, not time machine, something like time bomb. You know, it was ticking, the time was ticking, and it needs to at some point of time, you know, correct a little bit. So that was the indication of those two. So as you can see today, we are just corrected a little bit, not too much, and what's expected is more bullishness. That's what I'm thinking right now. I don't expect any crash anytime soon with the current policies of, you know, what the Federal Reserve is doing and what the Biden administration is doing and so on. I don't expect it. If I expect any correction, I probably expect more a melt up than melt down. Even though I'm saying that, of course, it may, I don't know that, it may happen. You know, there can be some event, there can be something happening on this market which causes crash. You know, this somebody actually was drawing sometime this big alligator jaw, which you can just draw long lines, like I started drawing one here. You could draw one more, you know, going back to, let's say, levels. Let me just start drawing from here, you know, lows of the March, and just continue drawing here. If I bring that here, that can be called alligator jaw, and you can see how massive the correction can be. So what I'm trying to visualize here is, you know, this kind of channel. You know, it represents kind of alligator jaw, and we could see massive correction going up to here, technically speaking. Will that happen? I don't think so, not anytime soon. You know, should it happen? Yes, it should. The market is definitely in a hyper bubble, overvalued, and some sort of correction should happen. But what we see from the governments, from the Federal Reserve, central banks, how they react, well, they just create more currency, and that will push the value of the stocks up naturally. So do I see that happening? Not really. So not anytime soon. Again, bullishness. So yeah, that's what I wanted to tell you about the markets. If we look at the briefing.com for today, what's going on. Dow and all the other markets, Nasdaq and S&P 500 are a little bit down, just corrected a little bit. So major indices trade lower, relative weakness in Nasdaq. Nasdaq is technology, so information technology is a weak sector today. Consumer discretionary and industrials weak, staples are strong today. And broad-based losses, okay, broad-based losses, what they mean, we have losses also in cryptos, we have losses in gold, we have losses in, basically everywhere today. So nobody's really performing in a green way today. And this you can see if we go to Finviz and I just drop in the map, so when this loads, hopefully soon, you will see the map of the market. You can see everywhere it's like kind of red, and also crude oil is up, okay, that's good, and natural gas, but everything else, gold, Dow, S&Ps, everything is basically cratering, going down. So you see how the markets have been moving to now. It's more bearish than bullish, and this on the map you can see which sectors are performing bad and which are going more or less sideways. Healthcare seems to be doing quite okay, but all the rest is kind of more red than green today. Okay, so what else? Let's go to economic calendar and see what's happening this week. So if I reload that, okay, we are here, 19th of April. Okay, do we see anything? No, 19th of April, no major events. Tuesday, April 20, no major events. Okay, we see in Canada, Bank of Canada monetary policy. Okay, if you have some companies trading some companies or something on the Canadian market, would be very, very interesting to you. Also, trading on US market can be affected also by some major decisions there and whatever. So we may pay attention to this. Maybe something be happening on Wednesday 21st. Just pay attention to the time. Remember to adjust it. Okay, you should be able to set your own time zone here to see the exact times when events happen, and then you may anticipate some movements on the markets when the major decisions are done there. So Euro market 22, is there something on the US market? No. April 23, also not too much. So nothing much happening on the US market this week. How about the next week? If I load this, also not too much until Wednesday 28, where we have FOMC statements, so Federal Reserve, Federal Funds Rate, and some price conference. I would expect some movements on the market here, because they will be talking about the interest rates, and I don't think anything will happen to this number, but in case it does, this may move the market. So I don't see anything in the economic calendar which would be super crazy for me, which I should anticipate when trading options and trading stocks. However, economically maybe not much happening, but anytime something may happen, so you have to be careful with your portfolios. Anyway, this market is really crazy, fragile, and I think it's a really weird situation. Some people call it freak show, the current market, and it makes total sense to call it freak show because nothing makes sense anymore. Interest rate or S&P falling down, gold falls down with it, while it used to be a natural hedge against falling down stocks and so on. Now it's not anymore. It's really crazy. So be careful what you're doing. This market also presents a lot of opportunities. Knowing that we're printing so much currency and pushing the markets up, well, you can redirect your resources towards assets which are valuable and hated. And in my case, which you will see in a moment in the portfolio, I'm redirecting my cash towards, what am I redirecting it towards? Towards companies which are in the mining sector, mining for resources such as gold, silver, uranium. I'm also investing in silver, and I'm not investing through SLV, I'm investing through PSLV, which is a Sprott, Physical Silver Trust, allocated silver. And this is where I'm gonna keep my savings, okay? So I don't wanna save currency made in this portfolio in US dollar. I like to put it into SLV and physical silver, because this is the asset which cannot be printed, okay? And yeah, so basically this is the portfolio, and that's the last part that I want to discuss with guys from YouTube only. So the portfolio is this is a 100k account. Okay, now it's almost 150k because we have been generating some profits on it since a year, so more or less last year. And year to date, so starting from January this year, we are already 22, almost 23k up on this portfolio. Okay, we don't have many dollars available. So why? Because the portfolio is full of positions here, and through these positions I will go with my students. What I want to show to everyone is you know, what I'm more or less invested in. So you can see this is a mining company, this is a mining company, gold and silver, AG silver mining, AU gold. Okay, Colgate, that's a speculation here, Clorox. Okay, DNN uranium, EA speculation, Ego, this is mining, gold mining, silver, gold and silver, gold, silver mining. Okay, Merck speculation, gold, uranium. This is, I think, gold again. Don't remember these ones. These are relatively fresh positions. Polymetal, I think, is gold. Okay, this is, I don't remember this one. This can be also some minor. PSLV silver. Silv, that's a little speculation. I don't really consider it. Okay, that's insurance. Okay, T, it's a stock from AT&T, value stock, and also a stock which generates nice dividends. So income stock. It's not in mining sector. Uranium, VIX, this is my insurance again, so I call it I. Walmart, and oil, another resource. So you see this my portfolio is very highly concentrated around mining, metals, and commodities such as gold, silver, uranium, and oil. So commodity portfolio, I'm not really speculating with technologies. I think these companies are in a huge bubble, and I don't want to be there when they start crashing or something terrible happens. I would rather be trading something which has value, and you know, using options, I can simply cash flow from all these companies, and by selling option contracts, puts and calls, I can reduce the cost of ownership of these companies and simply wait and keep them in my portfolio. So I'm not doing strictly option trading here. I'm also owning stocks. You see, this is the shares that I own. The other ones I also own. I would have to open all these positions because they contain multiple trades in there. For example, if I open AG, you can see that I own 1,000 shares of First Majestic Silver, and I also sold the promise to sell these at $11 per share, while actually I own them at what, 17.50, yeah, something like this. So it's a major, shows a major loss, but I generate $480, and I've been selling calls on it for a while. So if you actually go to account statement, you can see how I'm performing. This is not necessarily true here on AG. So if I bring AG, I'm actually losing. No, year to date, actually, I'm making $440 on it, not losing. Position till today is a loss, but year to date, I'm actually up $400, even though this shows negative 1,500. That's because I've been selling and selling calls and puts on First Majestic. And this is amazing because I want to own this company. I'm anticipating a high move up, and price of silver at some point of time going crazy up, something what you've probably seen with bitcoins. This kind of level of upwards movement in unexpected moment, you know, this would probably happen very soon. So that's how the portfolio looks like. For those of you who are good with options, you can look up also my Delta, Gamma, Theta, and Vega. And I will focus on Theta here because Delta I cannot see on this beta weighted portfolio. But Theta basically means that this portfolio is making $221 per day, meaning I have a time decay here in all these items from sold calls and puts equal to $221 per day. No matter what happens, this currency will be popping onto my account. Okay, so 22,000 today. I have just 9K. I will be doing with my students one trade today. We'll search for some position, and this position will be a speculative position because you can see I'm already invested in so many companies. from the mining sector. I also want to teach my students how to create some speculative trades, and today that's what I'm going to be doing. So now we'll move on to the part for my students. See you guys from YouTube. I hope you enjoyed that. I want to also in the end just mention that if you're not yet subscribed, please come to my Instagram page. I'm just building it right now. You see, I just have 60 followers. I would like to have 60,000. You know, if you did not subscribe yet, just go ahead and add yourself there. Start following also to the YouTube channel, also start growing. Just 16 subscribers would be nice to have 16,000. And also on Twitter, I'm also available there. You can find me Option Mindful, also starting here with very few followers. I hope to build it up soon, so we have a nice community, nice knowledge sharing, and you know, I'm also more motivated to publish stuff. Okay, having said that, ciao ciao, and see you next time, guys, next week. Bye bye.